All right, it's December. You've heard of Elf on the Shelf. Now get ready for how's the market? There's nothing that rhymed there. Diving right into it, the median combined home price is $770,000, which is up only 0.01% year over year. So we are essentially baseline to where we were in November of last year. And last month in October, it was $785,000. So we are still slightly moving down in the overall combined price. So if you segment that and you take out detached homes, detached single family homes, and look at the median price for them alone, last month, or it was in October data, the October data was $884,000 was the median priced home for a detached home. This month, or this past month in November, the data brings up is $885,000. So if you look at the detached homes, they went from $884,000 up to $885,000. But if you look at the combined median home price, it dropped somewhat significantly, $15,000. So it's important to not just look at one single data point. It's important to consider exactly more specifically what your home is and where it falls within that, and make decisions based on the comparables to your specific home, your specific neighborhood, and your specific type of home. We are still pricing in what would be considered a declining market, both in demand, the amount of inventory on the market, and also in how the pricing is. Even though the detached home pricing was relatively static month over month, we are still looking at data points that show a downward curve in the overall market pricing. So you have to price with that in mind. If you're hitting the market today, you can't price on things 6 months ago. It's a totally different data set, and the market's not going to respond to that. The average days on market are also increasing still. 34 days on market is the average. It's still moving up basically about a day a month over the last few months. So it went from about 32, 33, 34. So slightly increasing still is what to expect in terms of average days on market for most homes that are being listed right now. And the list price to sold price has still dropped slightly again to 95.8%. So that means the average offer that's winning is coming in at 95.8% of the listed price. So what's most important to consider right now, I think, is that the market is just very interest rate sensitive. Now, early November, there was really good consumer price inflation report data that came in. Rates dropped in a single day from about 7.25% down to 6.6%. We've still gotten pretty good data over the course of the month to where now we're basically floating at around 6.3%. So comparatively, interest rates are pretty stable, moving around the 6.5%, 6.3% mark right now. Mortgage applications actually increased because of this. They increased about 4%, moving from about December 1 until now. So of course people are paying attention to that. All of a sudden mortgage applications increased. What that means is buyers are going to jump back into the market. Really, the thing that is pressuring the market right now is interest rates. If interest rates moved into something reasonable, affordability would come back into play for the general public, and there is so much backed up demand that the only reason there aren't more transactions happening right now is because the manipulation of interest rates have just slammed the brakes on the affordability of homes for the average person. So as interest rates come back into hopefully a range in the 5%, that's most likely going to be what we see moving forward as a more normal interest rate range. Who knows, home prices might still come down a little bit to fall back into that affordability range. But right now, you really have to watch what's going on with interest rates on a day-to-day and a week-to-week basis, because that is what's really causing the movement that you'll see on a daily basis in the market right now. Happy holidays, guys. Please reach out if you have any questions about your home situation or potentially buying in the San Diego market. Thanks.